Good morning, guys. This is Simon with Trade and Perform Coaching. Trade and Perform Coaching. Do not want this. There we go. And I'm doing the market preview. Today is 11/15/2019. Let me actually get the room started. So this is the first time I've used this software. So we'll see how it works. Quickly before we begin, this is for educational purposes only. Past performance not indicative of future results. Bottom line is trading can be very, rewarding and expensive if you don't know what you're doing, right? Both. So my goal is to help people find out and learn what to do and how to make money consistently without getting murdered, right? So anyways, long story short, we're going to roll here. Let me get the room started up here really fast. There we go. Okay, and we are rolling with that as well and in good shape. Hey, good morning, Randy. Good morning, Joyce. How you doing? So, hey, Naren. Good morning. How are you? So let's get started, guys. So real quick, first, let's go grab the profiles and take a quick look at this, right? So number one thing, let's even take a further step back and see if we can take a better understanding, right? So everyone knows the market is overbought. I know the market's overbought. You know the market's overbought. I do not care, right? I care about getting the proper setup based on my technical analysis of the market, right? Based on the opportunity and really what side is easier to trade on and knowing my setups really, really clearly. So the first thing I want to do to set up my day is I want to kind of have a look or a bigger look at what the market is doing overall. The easiest way for me to do that is to go grab my profile. So let's just make it easy. Let's start with ES, right? So ES is in balance hell. So what's the negatives of that? First of all, it's hard to get it to go in any particular direction. If you're not familiar with profile, while I do teach it, I suggest you just go read Mind Over Markets by Dalton. Or pick up any volume profile book. It's a basic in understanding what's going on with the market. But I can do a shortcut on this. We all agree that this is a fair price for the S&P, right? We can tell a bunch of information really quickly from this, right? So let's go do that. Where's my erase all lines? There we go. Okay, so let's get the easy part done, right? Easy's good. Higher highs, higher lows, all the way through here, right? So I know when I want to be aggressively shorting a market or an easy time shorting a market, I want to be below something, right? I want the idea of a buyer's trapped or a seller's trapped to help me out, in the process of making money. So right now, I can establish something really quickly and really easily in the day. In ES, A, we're in consolidation. B, we're gapping above consolidation. Right now, if I wanted to short, what would I look for? Well, at a minimum, right, based on where we're opening this morning, I would like the market to get below these two levels right here. So my first start is 3090, once we're back into 3096s, 3101s, yeah, I'm kind of reassured. I'm interested. You got it, right? But up here where I'm trying to pick off the top, right? So a lot of traders, and I think of specifically Peter, who's one of my coaching clients, and he's great with options, right? He'll come and say, Simon, every time we tend to break to a new high, we push back in, right? If you look up, he'll be like, break to a new high, push back in. Break to a new high, push back in. Break to a new high, push back in. And so maybe he's totally correct. You break to a high, and you do push back in. Still, so understand how he looks at it. He trades options and he trades time, right? So he's selling premium or he's buying puts under the market and he's covering for short, brief rolls down. This is a really hard, so Peter's been trading for over 25 years, right? This is a really hard way to pull short into the market, right? What happens to inexperienced traders is they think, oh, the market should revert to the mean. Let's say the mean is over here. And their natural assumption is we're going to come back and clean up stuff underneath, fill in gaps like we did over here. But understand, The market doesn't have to do that. It can gap and go. And most importantly, if you look at people, experienced traders who are shorting this market and they're trying to come back around to go, well, no, we should be short. They're having a really difficult time getting profitable, right? That has to be a big primary objective of staying profitable. So what we know this morning that we conclude on ES, we're making higher highs, higher lows. We're gapping up. If you wanted to be aggressively short, I would at least wait to get underneath 3101 to 3097.50. And the last thing that I do when I am, let me mute everyone out. There we go. The last thing I do, and if you hear background, that's my lovely 3-year-old performing a little concert for me. What I do when I write a little note, right? I tend to get really frustrated with the straight up price action, and then I get concerned, right? Even if I want to be professional, I get concerned that, hey, this thing's just going to turn, roll, and go straight down, right? So just write down on a piece of paper. It's okay if the market goes straight down without me the first day. There will be other opportunities after we've established that we've broken the straight up nature of the market, right? So that part's pretty easy for me to do, where I go, okay, I can just let this go, right? So I have a better opportunity down the road, and I don't keep getting anxious, because anxiousness leads to forcing trades, right? It's a big part of bad trading, right? So we know what we're looking at on ES. Let's go take a look at CL really quick. And CL set up perfectly this morning. I wrote out the narration this morning. It just played out early, right? So if you'll look, what I wrote this morning to the members of the room was, let's see, yes, CL. I said, let's see. I thought I wrote it down. Maybe I fascinated. Maybe I just a fantasy. Okay, let's see. Buyers are in control. Let's see if I have any other levels here. Okay. So normally say that we would be we do for a big vertical move, but consolidation is so wide, it's more like a megaphone pattern. So breaks of lows and highs generally set up good longs and shorts in that environment. So looking for a trap at yesterday's low if everything else sets up with it, right? So let's go and talk about that for a second. So what I'm talking about here on the profile on CL, right? Okay. So what you'll notice is, see how we have a megaphone here? So what usually it says when we have a tight consolidation, break from consolidation, roll lower, right? Consolidation, break from consolidation, roll higher. But we don't have that here. What we have is a very wide consolidation, and it's getting hard to get a break, right? We just keep agreeing on price at the same area. So literally the hardest place to trade on this chart is in the middle. If you erase all these lines, and you bring your nifty Fibonacci trade, you just do this, like this. And then you do like this. That's rough, but pretty close. Pretty much this price right here, this has become roughly the most difficult place to trade on that chart. And you can mark it down. It's right where we're at right now. Why has it become difficult? Well, and this is for aside from setups that occur at that point, right? Well, just look, if you shorted here, you get run over to the upside. If you went long, you get run over to the downside, right? So this is literally the very definition of you're better off catching on the edges, right? Catching the trade on the edges and staying the heck out of this area. And if you remember yesterday, if you try to put a trade here and grab the reversal in this area yesterday, right, you got smoked on the downside move, right? If you picked it up down here, you are right. If you picked it up here, you were good. Now also notice, because we're in a megaphone pattern, and this applies to all markets, then not just CL, right? That's a megaphone pattern. We just keep generally getting wider, right? So what you'll notice when we're in this pattern is what's consistent is break a high, fall back in, break a low, push back in, right? We do that pattern over and over, right? And then you'll see this morning. So the setup that I wanted was lower, right? To break the low. It did it pre-market. Hopefully we'll get another shot at it today. Hey, Bill, good morning. But what I said, the reason why is I want a break of this low. right? So now let's take that idea. So we know we're in a megaphone pattern. We trade in a wide pattern. You can easily trade through here. And this is a double distribution, making this a beautiful upside target and a great resistance point, by the way, right? When you see, you don't get a lot of double distributions in CL, but when you have them, they tend to make fantastic location, especially when it's so clearly distributed like this, where that's going to be a great point of resistance when it gets there. Okay, let's rotate over to this morning. Take this away. And I was up, I stared at it, and I did not take it. So shame on me. You'll see I have it all mapped out as well. Here in just one sec. I don't have it mapped out on this chart. Where did I get it mapped out? I mapped it out on this chart, which is a 500 tick trade, but net, I want to show you this. So we can show you here first. So if you look here, right, why did this set up? Well, remember on the chart, this is our white zones, 56, I think 50 to 56.40 or some variation like that, which means off the profile chart, this is strong resistance. We just missed it. As a matter of fact, I know what it was, 56.60 to 56.43. That's the white zone off the zone I had posted right over here from yesterday. I didn't change it. Same thing. Strong support. That's what we were targeting to the downside yesterday, and we missed it by 2 ticks. I was talking to Bill, right? So the next thing that occurs when I'm looking for that is what I wanted was what we got today. I want to push into this zone, find buyers, and then find a reversal, right? And what you'll see is we got a fractal off the bottom, shift up, and then I said, look what I wrote. I said, what I'd like to see is, right, if we come back in here, right, so I wrote out the formula, almost exactly what we needed, right, which was like break of the low, and highs are generally set up as good longs and shorts in this environment. So looking for a trap at yesterday's low if everything else sets up. Okay, so if you look, one of the problems is when it's slow and grindy, it doesn't always set up here off the bottom. So what we're looking for here, so see how this whole thing turned into a huge extended leg A? If you treat that whole leg down as a leg A, and it looks like this on your extension. So it kind of go like this. Okay, so there's 2 ways to draw it. It's either this to this, okay, which works just fine. That turned out to be a 161 extension, or I liked this, and then it turns out to be a 618. Really doesn't matter how you draw it. We fell just shy of that, but it got you right in the neighborhood with that anomaly, right? So this is where I was looking long. I was hoping we would be here on the open. We obviously were not, right? Next part of that picture, right, is I want to go back and look to the left. Okay, so in recent, it's always variable, but in recent, when I'm looking at the chart, this is my recent swing low, right, when I go back. So I want to draw off that swing low. So if I take my low, I draw back, and voila, we are in the 50-60 location, right? And that's the other thing that I wanted to be in, right? So yes, I'm very, very interested and was already very interested. I'm still interested during the US session if we can hit that location, right? So that's anomaly, stretch, extension off the top, key support area, right? So now I have 1, 2, 3, 4 pieces that are really important, right? So let's keep digging on that, right? Next piece that I need. So one of the important pieces is I need to break a swing, right? So you'll notice over here, I didn't have a swing. We put the swing in here, right? So if I can keep going by steps, swing gets put in, right? Now the next thing that I need is I need this broken, since this is really my last leg down. I need this broken over here. We don't have that done just yet, but they're trying. You get a point of control above, right? And this is yesterday's low right here. So look at all the components. Break below, close back in, 50-60 back. All we don't have is a fractal over here. Would have been nice to get, right? And so what did this low look like? So someone asked me the other day why I was going to lower levels. So I bring in my 500 tick chart. See, this is the same picture, same chart, but I'm getting a little bit of help and looking at what I'm seeing. So first of all, you'll notice I get a huge settle wave on both time frames right into support. Bill and I were discussing this yesterday. Really important, showing that they're washing out. I'm seeing just a boatload of selling there, right? Shortening of the pushes down is the other thing we look at. So look when they come back in and sell again, right? And there's just nothing on it. That was a big clue. So I wanted all of what's taking place here to happen just during the U.S. trading session. It's the only thing I didn't get. I was just too foggy brained at 5 a.m. That happened at 4:30 this morning. And I was working on formulas and process. And I just wasn't bright-eyed and bushy-tailed enough to take the trade, right? So next, moving through there, what this did give me here, see this little ledge that I had right here? I want to show you because it's important. See how I couldn't get that ledge here? It was just almost impossible to find. You could have drawn it from here, but it was just much more prominent right here. You can see they actually put in a fractal right there. So I want to show you this. I now go to a smaller time frame, push this out. So see how I have a little ledge right here? See how they try to push up here and it failed, right? But now I know because they try to push up, you can see they try to hold it, right? You can see that there was some sell pressure off the delta. They couldn't get it back above and they closed. So two things. I know that they failed here and that sellers came back in. And if they get above this lip now, if I draw from here to here, let's see this real quick. Paged. Let's find out if anyone needs me. I think they do. Okay, that's nothing. So here's the 764, 56, 54. Once we close above that clearly, which is there's your shift, right? And then lastly, your last piece that you can put in is go and track that back over here. Right, there's the break, there's your wave, right into your 50-60 back at 7:30 for your launch. Right, that was right off of Econ, so a little bit tougher ask on that, but yeah, it made sense. That is the picture right there of what we're looking for, right, guys? So particularly guys in the room, particularly guys I'm coaching one-on-one, right? That is pretty much thank you, sir. Which is right here, right? Right. For do have two wave, green wave, bigger. So you're talking about right over here on this leg right here, Bill? Oh, off the 9, excuse me. Let's go fix that. Take a look. Okay. Right here. So this, wait a minute. Bill, I don't understand. I'll circle back around with you. I don't understand what you're trying to communicate to me. I agree with that 100%, just based on the trap alone. And then if you look, right, you can bring in your last piece. Left shoulder, head, inverse head and shoulders, right? And so now, my long would be targeted is the closer I can get here. So between 56.70 and 56.60, I want to be long CL, stop on a point of control that closes below 56.60. So my risk is about 20 cents a contract, right? So I would tag one here, right? And then maybe one more behind this fractal, right? Maybe one more behind this fractal. Do not put your stop within 2 ticks of the bottom of this fractal, guys, because it will come in, 2 tick it, and roll. The other thing you do is you can wait for it to come in and shift up out of here. That'll usually lift if you hit the little up arrows, right? It'll usually come in, give you the shift, and blow to the upside, right? So that has like almost every piece of process that we look for, right? Almost every single piece of process that we look for is all in that trade. And what should happen now is that thing should go to 57.50 or 57.60. I use should with hypotheticals, right? You got to adjust for what the market's showing you, but that's the should. If there is a should, that's the should, right? And the market never has to do anything. That's what you're looking for. And that setup was clean and clear, right? Also, the biggest push to the downside, right? So if you look at this move down, right? So here's the biggest push down. Look what the last time, when you look at a low, when you get the biggest push down into the low, would have been, it's been a while. These are all pushbacks off the low. There's just not been a big push into the low for a while. It's right here. That's the last time we had a push into the low. All right, so if we look at that, roughly, I'm just going to eyeball it. So once we get above that, right? So see how they push down? And they push down, they weren't able to make any headway with the biggest sell wave, right? See how you can't, see how that fed right into this? Guys, can y'all excuse me just 1 second? I got to help put the twins in the car. I'll be right back. Need some help? Sorry about that, guys. So my whole point, if I had a whole point about that, is simply this. What I want to show, last time we came off, see how you get that big push right into the 50-60 there, right? And look at all those sellers that come in there, right? And then bam, look at the launch, right? We'll see that picture. We'll come back over. Switch back over here. It's the same picture. Right into a key area, huge sell wave, right? Huge sell wave. And right here, this is where you want to start putting in from 70, right? So I'd limit like 70, add 62, stop 50 would probably be my add. It's 20 cents. And I'll do exactly that, right? So I'll limit 70. turn this off because otherwise bells will start ringing all over the place. And I'll limit 62. And I will stop the whole thing at 50, right? So that'll give me a net risk of, my average will be about 66 cents, 50, 16 cents on the trade, right? And what am I betting? I am betting that we will hold this left shoulder right over here, that we will not close below it, that the press in will find responsive buyers, right? And I'm simply hoping that we can make it there. We may not, and I got to tell you, we may not make it past the 50. It may be the 50 and go, but that's all right. My original location I wanted was all the way down here to start with, right? So I'll wait patiently. I'm limited down here, and if it doesn't make it, I'll find a trade someplace else today. I don't have to be the first one into the fire, so to speak, right? So give me just once. Okay, everything's all right. They made it out. I heard the door close. That's good. So that's my 2 cents. And like I said, it might just come off this 50 and roll, and that's okay. So that's what we're looking for, guys, right? We're looking for sellers to press, someone to trap, right? And then the setup. So I didn't get it. It came off the 50, right? And I'm all right with that because I know when I get it to this 70 area. So let me tell you, if I could have picked it up down here off the 600 range chart, I would have gladly added it at the 50. If my average was like 50, 60 right there, I'd gladly add it, doubled up at 79 to take it up, right? And now you look, we broke the swing, right? So now we're going to target that thing up. I'm going to take it the other way. All right, we're going to go dun, dun, dun. Now, what do we have upstairs that we are targeting? So now I can come over here. So I know my 261 is all the way up here, right at 57.40. What sits at 57.40? Anything? 57.50 to 57.67 is that yellow zone up there to the left. That's based off the daytime profiles, right? And you can see this is also, here's where I made a mistake without looking at the profile. That was a backside test of that anomaly. You can see where sellers came in prior. So now it becomes responsive buyers off of that. So maybe an error in where I took that. As a matter of fact, now that I did not get it, I will pull it and watch, right? And really that's it, right? That's what we're looking for. So now it's just go back and start hitting it again and again. The other thing that I'm hearing, guys, so there's someone who's new in the room and they told me yesterday. So yesterday on CL, I took one trade. I was wrong on the read, right? So the whole idea is that I'm getting an RR, I'm getting a risk reward ratio that's greater than 1-to-1. So you'll see on the wins, 30, 40, 50, 60 ticks. On the losses, 10 to 20 ticks, right? It's not okay in my book if you're making, so he wrote me, says, hey, I lost over $5,000 yesterday. I just over traded. He goes, I revenge traded is what he said, right? So I took one stop in CL yesterday and had an otherwise good day, right? Very good day in NQ yesterday. But I had an otherwise very good day, right? It's not okay. Remember, we're all going to get what we want out of the market. If you want edge and action and constant trading, you'll find a way to deliver that to yourself, right? Because there's no restriction on the trading. But if you want serious trading, right? We had 2 locations yesterday, right? So if you look, yesterday, this was our white zone in the bottom. I'm going to go back to CL because NQ is a little wacky with all the news that keeps coming out. But if you look, this was our original target yesterday, right? This is where I lost money. I was trying to get this to hook and come back and take out these stops up on top. Failed. Didn't happen. Watch for that to happen, by the way. Well, it would be very common to come back and sweep. What these little triangles are telling me is that there's a huge effort to turn, and they did. They turned and they took it all the way down, right? It'd be very unsurprising to see them come out and sweep. Everyone has to have their stop right behind here, and it'd be very common to come up, sweep all these stops, and then roll back down. It'd be, as a matter of fact, it'd be textbook, right? So the next piece is we didn't have it here. When market closed right here at 130, I said your long location is 56.75, right? back to 57. That trade worked. It just didn't work in a time frame that I trade, which is I'm not going to take a trade after pit session close and initiate, because too much funky stuff can happen at that time. There's not a lot of liquidity, and news can really rack you on your stops. I trade too much size to get hit like that, right? So the other piece, so what I'm trying to say is there was 3 trades available in CL over the last 24 hours, right? You can either go on long or short here. I chose wrong, took I think it was a 15-cent stop or a 16-cent stop, right? I didn't choose wrong, I just didn't trap. That's what I was shooting for, and not everything else lined up with it. Trade number 2 was right here, right in here at 75 cents, right where that little blue bar is. And it set up after pit session closed. Oh, it set up 3 minutes before pit close. I'm just not going to take the trade there, right? But that's where the long was, right? And then the next long would have been down here in the white zone, the 50-60 back, or if it'll hit, I'm still willing to take if it'll hit into this 56.70 and 56.60, right? I'm still willing to take that, and I'm willing to take the stop in that location. Okay, so this is all very, very, very important, right? 3 trade locations, only one of which I executed, right? One of which came too late in the day. That's one trade, 16 cents. So you got to remember in the morning, right? And in previous mornings, I've been hitting 50 to 60 trades on CL, right? Or more, right? We picked off the low right over here. Or I realized it was pre-market, but I had the low somewhere in here. It's the same setup. You see that? See how it came in, forced down. In this case, I had a fractal to fractal, right? I think my long was right here. It was 37 cents. I forget, I posted it on the blog. But that was a long location, right? That was worth, and I sold it early. I sold it here. I was out way early. That's where I was out, right? So the whole point behind it is this setup keeps reoccurring. Learn it, wait for it if you're in the business of making money. However, it's boring waiting for it, and then it requires a good deal of patience to let it stretch. From the time I started looking at this trade was 5 in the morning. I wasn't up here, but I was up right here, 5 a.m. That's where I started looking at this trade, and it took all the way until 8:44, 3.5 hours for a day trade. That's a lifetime, right? To have the patience to let that trade play out, right? And it's really important to me, especially for the guys I'm coaching, guys. Y'all got to stack up the P&L, right? Don't blow up your accounts. It's not worth it. And it's a waste of time and energy, right? And majority of people in day trading fail. Okay, so that's not very promotional. No one's gonna be excited about that. Majority fail, right? As a matter of fact, it's staggering. I'd say 90% of people who try day trading fail from the retail side. And when I mean fail, limp out, I'd say 70% completely blow up. And blowing up is not uncommon, right? So my goal when I'm coaching someone is to get you, and I was speaking to someone who I coached one-on-one the other day, and I said, and she said, well, hey, I have to make money pretty quickly. And I said, you can't afford to screw around, right? You can't afford, you don't have the luxury. I have 25 years, not 25 years. God, I hope it hasn't been 25 years. Shit, I'm almost 50. It has been 25 years. 25 years of going through this stuff and refining, right? If you started trading 6 months ago or a year ago and you're in your mid 50s, right? You don't have 25 years to figure this thing out, right? It took me a good 5 years of just going in and blowing up a couple times before I finally figured out how not to blow up, right? So my job is to skip you through all that. So just hear me out on this. And damn, that 50 retrace is perfect. It's just on fire to the upside on CL. If you don't take time to know where you're making your biggest mistakes, and someone isn't being hard on you to skip over the mistakes, you're just you're just extending the amount of time you're going to need till you finally come to the same conclusion, which is I have to be incredibly selective on what I take, and then I have to have my own emotions under control so that I can take those trades properly. That's what it's all about, right? And then you have to know when it's good to trade and when it's not to trade, meaning don't try, right? So imagine all the people on NQ. I'm going to drag my NQ trade over here this morning, or even my ES. Imagine everyone who was sure we were breaking to the upside this morning on ES. Bam. Now, imagine everyone who chases, oh, we're going down. They get killed, right? On this move to the upside. This is pure vertical. The reason I'm bringing this up is people are going over and over and over again, and they don't know where things break. So let's look at ES for a second so we have an idea of where this will break. The easiest way to tell when a product will break is you do this. There's the base of the move. There's the peak of the move, right? Easiest way to tell, right? It starts to set up your whole thinking process. That's what's got to go. If that doesn't go right there, if you don't get below 30.90, there's no short. And what I always hear is, but Simon, if it goes from 31.11 to 30.98, that's 21 points. I want to be short that. Well, be my guest. Find a way to capture the short. There are ways to do it, by the way. And I'm going to go over here, but there's ways to do it, right? Be my guest. But it's the hard way, right? When every little dip, even when you're breaking the traces, right, you're just flying into another retrace that's getting bought. Everyone wants in on the market until it's broken. And the other piece is, well, how will you know? It'll close below the prior day's low. That'll be the first big sign that, hey, something's changed. Now you can start to be aggressive on the rallies up for bigger rolls to the downside. But remember, the dips down are going to end up getting bought too, right? Dip down are going to end up getting bought. It's important to remember. So long story short, long story short, we didn't get exactly what we wanted, right? I didn't get exactly what I wanted in terms of a look off the bottom, but anyone who's trying to short this and trying to stick it is just having a miserable time, and I wouldn't join that crowd. I know this thing starts to look ugly right here, right? And I could have even used this off of this right here when we broke in right over here, but look how quick it snaps back against you. And that's emotionally, you cannot take out the emotion part. If you start shorting this actively, the odds that you catch the big roll down are very, very small. Hey, Victor, good morning. Welcome. Are very, very small. And the reason why they're very, very small is because you're going to be so on edge on covering it, and as you should be, right? Because it keeps snapping back on you. You're going to be so on edge on covering this thing that even when it does roll down big, you're probably going to cover early. I know I would, right? So my suggestion is for the short, get the evidence first. Want to see the other sellers there, and then come around on the rest of the pieces. That'd be my strongest suggestion, right? So anyways, CL is obviously off and away. That's too bad. It didn't give you the 70. It gave 73. It didn't give 70. And it certainly didn't give the 68. That was a good long. And so we'll just go and search again for what might be available next on that trade. Hunting NQ for I'm willing to trade NQ is the only thing I'm willing to trade short. But I can tell you if I short it, I'm scaling as quickly as I can to get my risk off, right? And then leave the trailer because I do not want to pay for my decision making in terms of actual dollar losses. Okay. So, and in the meantime, remember CL right now is in the prior day's point of control right here. I don't know if y'all can see that. I don't know why it isn't. Oh, I know why I covered it up. You can see it, right? Yeah, I just covered it up. Sorry about that. CL's inside the prior day's point of control. Horrible place to trade. I know this is a perfect example. Work today, won't work tomorrow. Work this time, may not. It's about a 50-50 deal, not strong enough versus the white zones work great. The yellow zones, both sides, work great. These are the areas I want to initiate in, right? And remember, you're not missing anything if you're adhering to your trade plan. If your trade plan says I need A, B, C, and D, right? Those are the elements I trade. That isn't trading the market. Price is important, but where the price is at or how much it goes up or down should not matter to you if you are trading a process. Because then what you do is you go, this is my process, this is what's set up, and I took it, and I have X percentage rate win rate on it, right? And therefore, like let's say, for example, this didn't set up for me. Let's pretend none of this was in my repertoire of looking for a trade. And all I said was, well, it came down to 56.44. I should have known to buy it because look how much it went up, right? Okay, that's how bad traders think, right? But what I explained was pre-market, hey, I want to dip below prior day's low. I want to see a good chunk of selling. I want to see get us above the swing. I like to see a retrace. Even if it goes again, I'm willing, like I was, 56.70 to 56.72. So I didn't miss anything because my trade plan says that unless I'm already up big off the bottom, I don't take the 50 retrace. I'm in the 62.764 area, right? So therefore, it is literally impossible for me to have missed this move up, right? Even if I might say, well, I missed it, but emotionally, right? I didn't miss it because I just couldn't get filled on it. Why? Because my trade plan says I put my order at 56.70, 56, whatever, 68 or whatever the retrace is there, right? Whatever, wherever I had limited, I've already pulled the order, right? That's where I put the order. And if it gets filled, then I did my trade, right? But just because the market comes in, goes down, comes to some random price and turns back up and goes, right? Which is the mentality of most retail day traders. It went up or it went down. I thought it would go down, therefore I should have been in it, right? Is never going to let you do the three key objectives that we're trying to do. Key objective number one, understand what the market's trying to do, right? Don't buy where the market's, understand whether we're trending, balanced, right? And whether we're trending up or down. That's the first thing you have to understand is the big picture. Number two, what your entry looks like. If you don't know what the entry looks like, even if you're doing that entry in a poor location, you have a better chance of making money than not knowing what your entry looks like. So the third objective is to get the setup at location, right? Keyword setup at location, right? And then the last piece is to get the RR. When you finally have the trade, let it stretch for you. You can take risk off, but you got to let a piece go or you're never going to make money in the business, right? You got to let the damn things stretch. It's hard, but you got to let them stretch because sometimes they come back. And how do you know? You don't, except you can draw your extensions and have a pretty good idea that they'll hit the extensions, right? But you should never, ever be going, it went to 56.44 and I should have known that it was long because it went to 57.08, right? That's not a process. The process is into support, big sellers, and then through the whole list I just went through, and now you're ready to go in business. Next, environment is important, right? For example, when I look at NQ right here, off the 5 range, I go, it is short like a banshee. That's what I think. I think it's short right here. I think that could turn into a top, right? Now, what's the risk there? The risk is one tweet, China deal, and bam, it's going to fly, right? If you trade size, you're going to get stop run. But more important, I'm just going to be on freaking edge every time I enter that trade, that there's going to be some announcement that's going to just clobber me, right? If I get on edge, I can't trade smoothly. And if I can't trade smoothly, I can't make good decisions. And that leads to overtrading, revenge trading, or just pure stupidity, right? And I don't want those. So in my journal, I wrote, I know, I had to go reinforce it because everyone in the room knows how much I like to short. I had to reinforce it in my journal. I know the market's going to roll over hard one of these days, right? It's just going to be a straight down nasty, take out every stop in town, hit the exit. It's going to be a fire in the theater, right? Probably going to miss it, right? I may even take a stop to the long side in it, right? But we haven't gotten run over in any of that, right? I don't have any P&L I have to recover from that whole move up, right? I have some good trades in there on top of that, right? So for me, yes, I know it's potentially shortable, right? I understand that technically when you look at a chart, it works. If you're not on edge about a tweet coming out or an announcement or anything else, right, you're good. But I can tell you, I spoke to someone else last night who, and this is what they said, right here, they told me right in here, they said, that is set up to roll to the downside. It's hit an extension. We're in resistance because what they were looking at is what was this was over here, right? They're like, look how big that push was. They couldn't break the high. So they were looking at it like this, right? So you don't know what's coming off on the right. And they said, look at that. We swept the stop. We ran all the stops. And they said, if I can get short right here, which was a good plan under normal circumstances. So if I can get short, what did he want to get short? It was 10 right here. He wanted this bar short right there. Hopefully a little bit over, but he wanted to start to go. So if I can get that short, I've got him to the downside, right? Looked all good till news hit and you're sunk. Right now, in his case, he probably just took a 5 or 10 point stop, right? But that's the risk. It's a risk I'm not willing to pay. So you write it down. Yeah, I'm willing to pay it. No, I'm not willing to pay it. I like easy, so I'm not going to pay it. And I still think we roll lower, right? But not at the cost of just getting myself annihilated. And I reiterate that because of all the people I've coached. There's a long line. I've been doing this coaching outside of my own business, meaning my own trade desk, coaching people, I think, since 2014 now. Had a lot of people come through the door and out the door. Things that people have in common that succeed. They quickly, I can list it for you now. I'm happy to do it because I'm not going to trade until after 9 o'clock. There's Econ at 9. I'll let them work out whatever they need to work out. Then I'll start looking for my setups. Okay. Here's what they have in common. People who do poorly, they are defensive of the decisions they've made, right? They want to justify their decision-making process instead of learn, right? They want to argue that it should have worked even if it didn't work, right? They worry about how much money they're making instead of how good the setup is or isn't, right? They're worried about taking profits instead of doing the work and looking at the trade where it might go, right? They constantly cut their extensions off. And I mean constantly find a reason to get out of a trade they're in when they're winning. It's in my book, that is worse than taking losing trades, right? Because let me tell you why. If you have a 70% win rate, but your RR is less than the dollars you lose per trade, you're sunk. Doesn't matter. You can have an 80% win rate. You're still sunk. Your RR has to get in line, right? And they want to be right and they want action. That is the profile of someone who loses money in the market. It's just a matter of time till they're gone. Profile someone wins, and Ron comes to mind almost immediately. So Ron was one of my first coaching clients. I still have Ron as a coaching client I think I've been coaching Ron for 4 years now. Maybe 5. It's been a long time. Ron came in, and what Ron would do on the S&P 500, right? So Ron was easy to fix on this one. Ron would be in the room. So Ron's moved from 2 contracts to a bunch of contracts in that time, and he's well funded. But he'd be here, and about right here, he'd say, we're going to go lower. Whatever it was, it didn't matter what number we were at. We were always going lower. We were always going to close on the low of the day. And in my second coaching session, I just said, Ron, if you keep selling the S&P 500 at the low of the day or even below the mid of the day, and you keep trying to get it to close on the low of the day, which it almost never, ever does. Even in a bear market, it almost never closes at the low of the day, right? You are going to blow up and you will never succeed. And Ron said to me, well, I don't know if I can stop doing that because I really like shorting at the lows. It seems to keep going sometimes being the key word, right? So remember, we all have selective memory. 2 days later, Ron calls me. Hey, I went through all my trades where I sold, right, below key levels or sold when the market was down. In that case, this was back in 2014, 2015, when pretty much down 20 to 30, pretty much marked a low, right? And he goes, every time I sell and the market's down more than 10 points, my win ratio drops to below 20%, right? Every time I short and the market's down more than 10 points already on the day, or we've already rotated more than 15 points off the high, if I short that at that point without waiting for it to come back up, I lose money. Ron never did it again, ever. He never shorted after that conversation. First, he said, I can't change that. And after that, he never, ever did it again. Ron has transitioned from, I like to short the market to go down. Ron trades long only now on the S&P, right? And he's closer to a swing trader now than a day trader, but whatever, it doesn't matter. He totally evolved. And what he did immediately with no conversation, right? He didn't defend while he did it. He just said, I don't know if I can change that. 2 days later, he said, I'll never do it again. He never did it again, right? Ron's made a boatload of money since then because everything else got cleared up. If you keep going long the S&P and he flipped, so I'm going to give a counter correlation to this. A lot of people say it, right? You'll see if you watch Twitter for any reasonable amount of time, you'll see people go, the algos are killing people. They hunt your stops. They're there to take you out. Okay, so this is a really simple formula, right? if algos keep taking your stops out, right? Or whatever you want to call it, keep taking your stops out, and you keep losing money because your stops keep getting hit, revise your strategy and put your entry in. Look at where you want to buy it. Look at where you want to put your stop and put your entry where your stop is. That would be my suggestion. That fixes that problem, right? And here's what the counter is. Well, if I do that, I'll miss my good trades, right? That's not true, because your good trades aren't paying for your losing trades if you're that person most of the time. Now, what are we doing? When we're looking for a trade, right? Look how we're reversing that. Where do you think, if you look at CL last night, and it comes all the way up here. Let's say you picked off the 75 cents from me. You took the 75 cents and it went all the way up here. Where's the logical stop? Hey, we went all the way up. I think we can go all the way back to the top of the range, right? So the logical answer to that is I'm going to put my stop right here. Anybody would do that, right? If you think about it, it makes sense, right? Except that this is the market, right? And so what did the market do overnight? We came all the way back, right? And then what it's going to say, so when the market does finally come up here, this person, our imaginative, we'll call him Billy Bob for lack of a better name. I live in Texas, so I can use Billy Bob. So Billy Bob's going to say, well, they came to take my stop. And it's like, no, they didn't, dumbass. They came into support, which was sitting 2 pennies underneath the low yesterday that everyone front ran it, right? You finally got everyone to panic out into support with that push right there, right? And now they're going to take it to your target. So what he's going to write is the algos took my stop. What he should have done is gone, if he got long here, he should have gone, there's a chance that they're going to come and break it underneath. Why? Because if you look to the left, what he really needed to happen here, see that extension? He needed a shoulder somewhere. So this became a shoulder. The problem was his head was so far away from the shoulder that once he closed underneath, it was totally busted right there, right? He had to have this hold. Once it closed above, he needed this. And the problem was that didn't even compose a 50-60 off the bottom, right? Any test into that 50-60 off this busted that head and shoulders, right? So then there's a next logical answer, right? That was the right location, but if you look at the chart, there's another support level right here at 5610 to 5620. It's a volume node that's sitting there off the volume profile, right? And if I look over here and I go, okay, if this fails, right? So you've already gotten your profit, you've gotten a risk off, and you can start working that trade. And my thought process is, I think the same as Billy Bob. I think we could go all the way back up here. But the reality is that there's another stop sitting right over here. And it would not be unusual for the market to come down, take out the stop, right? So if Billy Bob now comes over here, puts his stop, he's like, they're not going to get me this time. I'm going to put it a dime below the market. And he doesn't look where that last swing was over here. He actually needs his stop if he wants to survive that. Well, what he really needs to do is if it gets behind the 62 retrace, I'm done, is what he really needs to say, and I start over. But what he really needs to, if he wants to stick that for a swing, he needs to stop behind here, because we're very likely to run behind that for like 2 or 3 ticks and then reverse back again. And eventually we'll come and take all this out. And what will happen up here, right, is the same guy who's a swing trader. Oh, I got it off the top. I put my stop right behind. And what the market's going to do, let me demonstrate. Again, I don't care how far NQ falls until I see it break. And then I'll start pounding it. I'm just not going to short it. Same with ES. I'm not going to get ripped. And I know I missed the first down day, but let the market break the stupidity that we're in, right? So I'm going to show you. See this over here? There we go. So you come over here and you go, hey, look at me. I got the retrace, right? I got the stop run behind, and I'm golden on the short. This thing's going to 0, right? I see the break. I see all the selling come in right here. Oops, I wanted an arrow, right? I see all the selling come in right here. We're underneath that wave. We're rolling to the downside, right? See how there's no volume on this whole move up? See that? There's just no volume there relative to what was here. This is the big move, right? So put a line right on top of that. Pretty much right where every chump would put their stop. It's going to be right here. And that is why I have a sell limit usually sitting right behind there, because see ya, right? And that's how that works, okay? And then the sellers come in, they try to push back, fail, and we roll to the downside. We take out all the stops over here. Next logical location is to take out stops over here, right? Sooner or later. That's how the thing works, right? It's a machine. People put stops in stupid places and don't know how to manage a trade. So what I would have said from here is, even if you got this perfectly, right? So what are you missing? You're missing a left shoulder. So how are you going to get to roll down if you don't have anyone trapped? Unless this is your head and this is your left shoulder. But even then, fine. Let's say this is your left shoulder and this is your head and this is your right shoulder, right? I'm going to start doing this and drawing variations on 50, 60s back, right? So that holds. Your trade's busted right there. That's it. That is the place you were screwed. You may not have known it yet, but you were screwed as soon as it closed right there. You were totally screwed. It was going to come and take out all the stops above. Okay? Why? Because the pattern repeats. And what we're in the business of is finding small, minute, detailed patterns, repeating them over and over and over again, and integrating them into your thought process, and then going to work. So it's 9:02. I have a desire to make at least a little bit of money today. Let's go catch up on what our favorite everything is doing. So first, I'm on a 9 range. Let's clean this chart up and see what we got. So we've pushed up, fractal, fractal, pushed off the bottom. We've held left shoulder, right shoulder. Let's start drawing out our stuff. So this has to be the attempt at the left shoulder. So you're not busted until you close underneath that. Hypothetically, let's draw this out. Dun, 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 dun. As long as that holds. So really it's this. As long as this holds your kosher, you're good to go. Dun, 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 dun. I moved it. There we go. There you go. Even a little snippet underneath, as long as you don't get a point of control underneath that, that is good to go. There's no reason for you to have a stop down here, because if you close below here, this low probably goes anyways, right? So next, we need to know where likely resistance is. So the easiest way to find that out without going to the profile is to do this. Most likely point of rejection right now for a trade on a seller reversal is this to this. And then this to this. Failure to hit the 50 retrace off this rotation down would increase the odds of that low going, okay? Next, I want to come in on the same chart. Biggest seller who failed. Once I get above these guys, so here's the problem with shorting up here, right? If I get above my sellers, this is a pretty good chunk of contracts that went off for Europe, okay? If I get above these sellers, they're all trapped, and they can push to the upside. If you'll notice, all the way down, right, that's where the selling began. We couldn't get above. Selling began. We couldn't get above. It's not right. You can usually just short and go, if I don't get above it, I'm good, right? We've gone all the way through. So here's the last group of sellers right there, and we got above them, and you can see it pushed. As small as that is, we got above them, they pushed, right? If we get above these guys, they push, but more important, if we get above these guys, we also get above these guys most likely, and that would make me cautious up here. So if I take the trade up here, it'll be because I'm going to be very nimble and coming in and out of the trade, but I'm not crazy because I now have clearly just a truckload of sellers that are all trapped, and when you get sellers that are trapped, they have to buy to cover their position, or they have to get back into the trade. And it works the same way off top, right? So if you look on the way up, right? Buyers. Notice you're not getting underneath your buyers. Buyers. Notice we're not getting underneath them. Oops. We're underneath our last set of buyers. Bye-bye. Okay. So this is your last set of sellers right here. Those are the chumps. They were really the chumps. The whole group of them were chumps, but that's a chump right there. Whoever's in that, if you sold that, you're a chump, right? Take a picture of it. Never let it be you again, right? And now we're going the other way. So guess what? I have another measure. Here's my last push up. Now I have another little push up right here. Those are tiny, right? I understand that the volume is not very big on the total number of contracts, but I got to get underneath these guys. So notice we have a bunch of stuff going on. We have retraces, structure, who's in control, larger targets, potential stops to be taken out on top. And it all has to meld like you're reading a book and it's a story, right? There has to be a storyline. And the story actually has to make sense, right? You have to put all the pieces together. We speculate down here that we're going to get above these guys, right? And the home run comes when you actually get above them. And we can read that whole story as the story's being told by the market. So I can come over here and go, hey, I got underneath my last buy wave. I closed underneath. I backside tested it. And this is where I made the error yesterday. This is where I was trying to get long. Okay, so let's stop and back up for a second. Why did I want to get long here if that was the case? Because I overconvinced myself with the narrative of taking out the stops first, right? That I screwed up my own trade entry. Not to mention that we were underneath the 10 a.m. print from the inventory number, right? So total fumble. Reason I know this is I went back through and did each little part of this so I don't repeat that next Wednesday when I make the mistake, right? And if you look on this turn here, we did the same thing. Count it down, right? Buyers underneath. So you get underneath your buyers, gone. Buyers, right? So you can either do it as sellers or buyers. Either way, I suggest you track them individually. Sellers. Notice we're not getting on top of the sellers as we're coming down. Sellers, still not getting on top. Sellers, still haven't gotten on top. Sellers. Oops. Got on. Look how little that is. Got on top of my sellers. See ya. Hasta la vista. And remember, I'm already long down here anyways because this is into support, right? So I'm already long anyways. So now for today, if I'm looking for the short, I need to know right now that I need to get underneath the buyers. And I know another thing that we tend to go in sequence. And when it rolls properly, it doesn't get underneath your buyers. So I can trail up my stop by simply insisting that I don't close underneath my last buy wave. And now I can modify my picture of how I'm managing my trailers on the way up. Okay. And that's in addition to looking at the delta waves, which we already know the patterns there. There's a 1-2 off the bottom on the delta as well. So I'd argue strongly that we're going to come up, take these guys out, and probably come up into this area. Right? I'd be very confident if I were long right now, as long as I've paid for the trade at this point, right? So that's my 2 cents. Next element that's important here. Notice the dome. Like look at ES, right? It's 9:09 a.m. I take a glance at my dome. There we go. Haven't traded ES in weeks, right? Tick, tick. Look, let's just sit here and count the ticks. Wow, it's 9:09 a.m. We're going up 1 tick and down 1 tick. I literally can sit here and count off the number of contracts that are being traded without the assistance of a computer, right? I can actually see them as they're hitting the bid and the ask, right? Why is the market doing that? Well, because we're all waiting. Literally, we're all waiting for a China deal. Why? Shit if I know, but I know this. I've spoken to 3 fund managers in the last week, and all of them are scared to short. The indexes. They're all scared to short. They're even scared to hedge, right? Why? Because they know as soon as a deal gets announced, this little dome's going to go, and we're going to be trading at 32.0 something is what happens next. He's like, why do I want to hedge off at 31 when I can hedge off at 32, right? So that's the problem. And now we're all going to stare at each other tick by tick, right? That's what it's come down to. The trading has generally been better prior to U.S. session or very late in the U.S. session, meaning 1:30 to 3 o'clock has actually been better than almost anything else, right? Most days. So does anyone have any questions? I'm going to open it up for questions. They can't be fundamental, explain the whole thing, setup questions, but just general questions. That takes time and effort and too much. We'll go blind waiting. But this is not short right now, right? This is not short at all. On NQ, why anyone would want to short that to begin with is beyond me, but whatever. NQ, I'll throw the waves up. I'll have that up on the ES after this weekend. So let's do the same count, right? So now, off the high, we we need two elements, even if I was going to short, right? So that's my down wave, right? I know above those guys, I'm sunk. This is my last. I need 3 bars to be a buy wave. Okay. So now I'm underneath my buy wave right here. So I can actually look and go reasonably say, that's my resistance, right? If I fail to get back above this as we push back in, right? So what would be the logical area if I were willing to freaking short that stupid thing anyways, right? Well, my answer would be this, but I've got to remember one other thing, right? So this is my area in general, and obviously I can't get above this, which is conveniently lining up with all of that, right? And truth be told, if you just stayed on the bottom of this, this would hold, but we're down to 1 tick stuff. Like slow markets don't benefit shorts, right? So now look at this. So look at the move off the bottom yesterday, right? So before I get all eager beaver to be shorting this thing, right? There's my swing low, right? So ladies and gentlemen, boys and girls, what is likely to happen? I think that's the high. What is likely to happen right in here to here, particularly here to here, and if we were really lucky, right there. Until you break that, buyers have got it. So if you're shorting up here and you think the world's going to fall apart, you're betting that we can, and it might from up here. We've gotten underneath your last little tiny buy wave. It's in most markets, I'd start shorting this right through here. I just layer all the way through here and go, that's good to go, right? But I don't know when the president's going to tweet, and therefore I might get run over. So understand that. I've got a potential setup. I've got some buyers trapped, not a lot, because my big buyers are all down here, right? These are the guys we got to get underneath, right? Clearly, right? Just like these are my sellers. These guys lose, we're just going to go higher. That's all we're going to do, right? But there's a but in the process, okay? If I short here, let's say I pick it off perfectly, and it goes right to ideally 83.09 is where I would short that. Let me see. If I had a perfect world, I would short right there. What is that? 83.0875. Run it by a point. Okay. 38.0775. I'd stop on a close behind here. 14. So what is that? 0.87. Let's just call it 10 points. $200 a contract. Okay. In a perfect world, if that happened. Right. So, okay. So there's something important on this. Right. Let's say I short that, and then someone tweets something and it runs up 50 points. Okay. So this is the part no one talks about, right? Because in Twitterville and in books and in blogs and even in videos, right? What everyone goes was, well, I knew the risk and I was totally fine with it, right? Okay. So let's drop the bullshit because everyone's been in the room long enough. If I get stopped on that, so I don't break stuff anymore, but I'd want to break stuff. I'd be like, why was I so stupid? I knew this was hanging out here. Why did I short? Why do I have to dig out of this hole now? Why? We're not below a major break. We haven't broken the trend. I'd come up with all these lists to be mean to myself to make sure and ensure that I don't do it again, which doesn't work, by the way. Okay. It just doesn't work. Right. So if you're honest with yourself and you're saying that would not bother me one bit to get run over like that, well, then I'm okay with you taking that trade, right? But the reality is if I put out even 25 NQ contracts and I got run for 20 points because my stop run got hit on a news thing or something like that, and it wasn't 10 points, it was 20, so it's 400 a car, I would be furious. I'd be so furious that what's likely to happen next is 2 things. I won't see the next setup, or I'll mistrade the next setup, right? This is an element that's really important if you struggle making money, right? It's a really big element if you struggle making money. Your emotions, right, will totally override your logic, Okay. So my suggestion, particularly again to the guys I'm working with one-on-one, or guys like Joshua who've been in the room for a long time and working really hard on getting their game up, right? They've been trading for a long time, right? Always put yourself in a position to be on the easier side of the trade, and don't put yourself, if there's something hanging out there, like, so normally if I'm short prior to President Trump, right? Generally speaking, if you're short, you're not expecting a tweet from POTUS prior to this current POTUS 2.0 or whatever we're on, right? It wasn't a factor in the market, right? But I'll give you an example. If I was short CL going into numbers and it ripped me for 100 ticks, right? Well, wouldn't everyone go, well, hey, dumbass, it was freaking numbers and you shorted into it and it's in an uptrend and all that other stuff. Why'd you do that, right? And then the next thing that would come in my head is, well, now I got to work all day just to get break even, right? And now I start taking stupid trades trying to get break even. No, stop, recalibrate, get to a point where you can do well. And by the way, doing well is coming out easier in the afternoon and this lately than it has right now, right? And it's OPEX, which means they have this thing on lockdown, right? So my suggestion to all of y'all is ask what will destroy your mental stability right now. Is if I shorted that 8307, right? And then I had it rip back against me. I didn't rip against me straight up because someone tweeted, and I go, why? I'd say, why did I do that? Now, here's the flip side of that. If that's the right location, and this ends up going from 8307 to 8207, I'll go, shit. I wish I'd taken that. I will. Even though I just gave the whole arguments of why I shouldn't, I'll say, shit, I wish I'd taken that, right? But there's a big difference. On that one, it would have been like, man, that would have been a nice trade. Versus if the rip comes and destroys my position and I get a big stop, right? Or a fast stop or an emotionally disturbing stop, I'll be off kilter the rest of the day. Versus if that rolls and I see that it's broken at that point, and then I get a good location, now I can go, oh, now I'm pretty cool taking the risk, right? So I'm telling you, this right here is the right location. This right here, right now, is the right location. That thing should reject out of there, and it should not close above here, right? If it does, it's a busted head and shoulders, and they're going to push it out to a new high, which they probably will, right? I mean, just look at the market we're in. But that's the right location to find sellers, right? In addition, here's my wave down, and we're pushing back against this, right? So remember, now I have two competing interests or two competing ideas, right? Over here, this is my last push up. I need 3 bars for me to consider it a push up. That's my last push up. See how we're pushing back into those guys, and we're pushing with more contracts. That's what that's literally measuring, is the number of contracts that are being traded on that up move, right? So if that fails, right? If that fails at that location, right? So if I short 8307 against 8316, whatever that is, right? So here, I'll do it small. I'll do 1 contract. Let's just see what happens. Sell market 1. Nothing on that. I got 1 contract on. It will cause me no damage. 83, what did I say need to stay above? Well, let me throw something up there first to make sure I don't get swept. This is probably a horrible idea, but we'll just follow the process. Done. What is that, 14? I probably need it 3 behind to stay safe. So we'll leave it at 17. That's where I have it. So I'm shorting here. I'm not even trying to be perfect, but this is generally the right area. It's 1 contract. It will mean literally nothing, right? So it's $200 that I will lose for my little demonstration, but it's not a position. Like, it'll have no net effect. So what I'm going to do when I'm coming up in this, again, non-China deal pending type stuff, is I'm going to put 1 here. I'm going to put another one right against that, right there, 93.12. So that's going to give me, what's that, 83.12. So that's going to give me a net of 83.08 roughly, or 83.09 against 83.17, right? So 83.17 is my hard stop. The point of control, close above that orange line up there, is my mental complete exit out of that trade, right? So I'm going to start small, and then I'm going to do something else, right? On top of that, as I come up, right? So I know that this is my last swing up. See that right there? Fractal to fractal, fractal to fractal right here, right? So I have another place within this, which is this right here, See that, how that's lining up with this too, roughly? So we're in that right now. That's exactly, it's not kind of close to where we are. It's exactly where we are. So I would take out another contract at 11 pretty much, right? So here, I'll even do that. I'm going to lose on that as well. 1 at 11. It's one tick away. Let's see if I can get it. Got it. Now, full stop, 17, right? So remember, it's 2 contracts, and I can live with it, except I can't get my second stop in there. Let's do this. Yes. Set. 17, 17 and a quarter. Now, think about this for a second, right? First of all, I already know that I'm on the hard side of this trade, right? I already know that. But follow through in my thinking, right? Let's say it comes through to 17 but doesn't break the high, or it comes up to the high, sweeps it, and then traps back in. All of that is possible, right? So I want to go through the steps of what's involved in this trade. I know I'm taking the trade in the hard way. I know I'm in the right location, hypothetically, right? I'm not in the right environment because we don't have any fast rotation, counter rotation, right? I'm now getting the push back up, and I know if I close above these guys, these are gone. And then also the other issue here, which I didn't see this, damn, my last push down, and I'm above my last push down. So that was probably a moron move all the way around, but whatever. That's still the location, right? And I know I can't get it behind this area anyways. Okay. And now this is where I'm looking for potential rejection out of this area. The last thing that I would add on now is if I could get this push up and then I can get one of these little red arrows right here, I would add to the position at that point. For what? For a push back down, right? So now we just have a bunch of junk in this area. I'm currently down net on 2 contracts, 3 points. So, and my average is 83.09 for all effective purposes. Okay. And I still don't have a point of control with a bar above. And I think that 17 will do it if it gets up there, and that stop, that's where that stop will get affected. So what's my upside to this trade, which is very little right now. As a matter of fact, I'll cover it as soon as it retraces this, now that I know we're above, right? So if I'm going through all these steps, and notice, even in that analysis, right, I need to add a question. An entry to a short, is the setup valid? I'm literally writing it down. If I am above my last down wave. So see that? That's a great question. You know what? I don't know the answer to that question, right? I do not know the answer to that question at all. I know I'm in the right area. See, I found sellers. I got that part right. Okay. So now let's go answer the next part of that question. And how do we answer that question? We got to go see what's happened in the past. So now I can look over here, right? So there was a big fat roll down, right? So I just want to go to a place where there was a fat roll down, and I want to see it off the top since that's where I'm shorting, right? So I'm going to go back over here. I could just take this at 83.08 and say I was profitable, but I'm not going to do that either. And we have bottom of the hour coming up, which, by the way, is likely to break IB high. So just FYI, I will be taking some of this off. As a matter of fact, here we go. Since I already don't like it, 83.0 here, 7 scale. So now I'm at 1 contract at 83.11. Okay, so see, I don't like the environment. So now I'm backing the trade up instead, right? Because I've convinced myself. So now I'm short average 83.11, right? I'm up whatever I made on the first trade, right? I added into it. So I forget where I shorted the first contract at, but it was 07 or 08 or whatever. And then the 11 or 12, whatever I added there, right? So now, so see, I have this shift. And so if I wasn't totally paranoid about the president speaking, which I am, I'm going to take this opportunity for that shift. Trading 83.05. I'm going to go flat. I already did. Hi, I'm sorry, Q8. I didn't see your connection on this. I did short it. I just covered it. I think it's horrible short, personally, even if it's the top. It was just for demonstration purposes, right? And I figured out after I shorted it that I was above my last group of sellers. It was a bad idea. So now I'm going to go to my next step in learning process, right? But it's doing what it's supposed to be doing. If I wasn't afraid that we're going to tweet at any moment about a China deal and just shoot up, I'd have left the trade on. But I am. It's not a good short. We're still above support, and I'd rather be long on this thing all day long until this cycle ends, right? So, but it's the same process from down below. So let's go back the other way, right? So now let's go find a look at a top and see what that looked like. That was a top. Let's see. Where was a top? That was a top. Okay. So, but it didn't really roll down. But let's see what it failed to look like, right? So let's go to this right here. This is what we'd be looking at, right? So if I'm looking for a short, I got to get below buyers first. So, nope. I am flat. That trade for a golden 4 or 5 points, something like that. Nope. Nope. That was my last buyer right there. So let's see. Trapped above. All this other stuff, I'm not going to draw it all out, but it's set up. Backside test. So this is my last group of buyers. I don't want it above this. Let's see how that worked out. Oh, and they finally took my stop out, but not for a long, long time. It was actually, that was correct. Oh, we didn't go back and look, right? Seller, sell. So now let's go look at the sellers. Let's flip it. Seller, 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 haven't gotten above. Seller. Ooh, above my last seller. He provided support. I had to go when I got this right here. It was game over. Game was over right here. I already could tell you because I know the patterns repeat. That game was over right there. I had to cover. I know it made a slightly lower low, but that was my first sign that there was a problem with the trade. Let's go find one more example. Let's see when it was more volatile. Here, this looks more volatile. Let's see how it worked over here. There we go. That's the top. So let's go look. So below my buyer, seller, seller. Nope, nope. Yep, I'll count these guys. Seller, seller, above my seller, over. Yeah. So that's how I would be gauging that. And so what I know now is what I need to, once I break my buyer, I need to not get above a seller, right? So now I can modify the process on that, right? So now I add an edge and defense, right? So I add an edge and defense. And not only that, but if you'll notice, once we got above, it kind of clued me in that we're going to go back up. Now I can start looking for the inverse. And if you look what we did there, guys, it is 618. See that? It was right here. Is truncated. They just missed the 618, couldn't make it, but that was your target, right? When you get those extended A legs, right, without a protracted B leg back, so AB without protracted CD back, you're usually they're going to truncate the extension and reverse it anyways, which we already know it. You actually want a small AB to get an extended CD, right? So when it does roll over here, I bet that's what we end up with instead of a big AB leg down. Let's see. Okay, see that right there? Now you're set. So see this? Now you got A, B, and C, right? So now, on top of that, let's go look at the sequence. All right, dun, 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 dun. Last buyer underneath. Seller. So let's just look at the seller. 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 Ha! We don't get above our seller there. And we don't get above our seller here. So now we have the answer to what we're looking for. Because if my safety valve becomes not getting above the seller, the last seller on top, right? Just like getting above the last below, just like don't want to get underneath my last buyer on bottom. I don't want to get above my last seller on top, right? Because otherwise I know we have more potential to go to the upside, right? So now I can modify everything that we have in the playbook, right? And now I can throw that in on top, and that falls under safety valve. Now that takes out the emotion of me having to read this trade, right? So think about all the pieces that go in when you're trying to, it is a range bar, and that's the NASDAQ 100 that we're staring at. So, but it applies to everything. It applies to everything, QA. It applies to everything that you're looking at there. So what we're doing is we're stacking now. Notice I'm totally disinterested in trading this shit. It's now what we're doing is stacking thought process, right? And under that list of defensive measures on how you figure out if you're going to roll to the downside, now we know what it looks like on the top and the bottom, right? Now we can add that on top of getting pinpoint location. You're welcome to. If you can just send me an email if you'd like to join the room. I don't do YouTube broadcasts very often anymore, but it's here. I'll write it. Let's type it in. And my method isn't for everybody. You know, it just works for me really well. So at any rate, that's all I got. I think that was way longer than I wanted to go. There's a lot more detail in there that we have to go through, but that's really good stuff there. And in the meantime, right, we are past the top of the hour, and we're going to play this stupid little cat and mouse game of what's going on here is everyone wants to be long for the announcement, but no one wants to get caught on top, right? So that's all that's going on up here, right? So bigger picture, we know for the day. Talk to me underneath here, and I will press shorts all day long, but not until. So anyways, I'm going to take a break, guys. Guys on YouTube, thanks for joining. If you liked it, please hit the like button. It helps me with service. I'm trying to fix the streaming thing. How is the streaming on this? Is the sound and the video quality good, guys, from YouTube? If y'all leave comments or say something like that, but I don't know how the sound quality or the video quality is on this. So it's the first time I've used this software. So it's called Lightwave. So anyways, that's my 2 cents. Trade safe. It's Friday. It's OPEX. It's been a long freaking week. You know, it's been a profitable week, but long as hell. So if you have any questions, I put my email in the chat box there. So it's tradeandperform@gmail.com, and my name is Simon. And remember, don't be in a rush to trade. It takes a while to learn this stuff, right? Not very many people make money, but it's very easy to get into trading. It's not easy to trade profitably. So anyways, that's my 2 cents, and I'll laugh if I ended up picking off the top on that and covered it with 2 contracts, but whatever, it's fine. Anyway, and it busted the process, right? As soon as we got above this, right? The reality is, unless you get back below this now, these guys are trapped. You should actually be able to take this against this 82.88, this block right here. See this? These guys are trapped, and so they have to buy off of this to push. So the odds are the next shift up out of here pushes us to a new high is the reality of the circumstances. So anyways, that's all I got, guys. Hey, you're very welcome. Have a great day. I'll see you later, guys. Thank y'all for joining on YouTube. Guys in the room, I'll be back in just a second.